I launched the book within that same year. I left the medical device space. When I did that, a lot of people said, how did you do it? I'll never forget one of my friends who was a VP. He was like, hey, can I ask you some questions? And he's like, you're making this. He's like, how much does it cost for you to live? And I told him, and he's like, and you're making that much in passive income? I go, yeah. He's like, huh. A lot of people wanted to know how I did it.
Hey guys, welcome to another episode of Building a Better Business. Today, our guest is Chris Larsen. He's the founder of Next Level Income. Chris, thanks for joining us on the show today.
Absolutely, Jake. Always fun to see you.
Yeah.
Always have some laughs. And I know this is probably PC, so we're gonna be cool today.
Let's keep
we're
this
gonna
one
be
PG.
cool and non-controversial, but we're gonna have fun.
Yes. Let's not talk about politics. Let's not talk about Bigfoot or anything like that. Let's keep it PG.
Ooh,
but
that's a new one.
I know. But Chris and I have connected a number of times, typically at conferences, at real estate conferences, and the conversations are always a blast. They're always educational. I always walk away from our conversations thinking a little differently about things, not only just about life in general, but also about investing and things of that nature. But I wanted to bring you on the podcast today because you've got a unique background in that you started off in medical sales. So you were employed and then you left. You retired. I'd call it early. Maybe it wouldn't be early for you, but like you retired early and you launched Next Level Income. You got into real estate investing. And so I kind of want to talk through that journey because for a lot of our guests, it's they build a business earlier on, or they forego corporate life altogether and just say like, I'm going to figure this dang thing out myself. I want the freedom, whatever it costs. And so I want to talk about the journey of employed to building your own business. And now you're in a lifestyle where you've got a lot of freedom. Like offline, we were just talking about you're in Salt Lake. I just left you. We were in Salt Lake together like a week ago and you're still there. And you were saying how you rented a place, you drove out there, your son is skiing in, I imagine, Park City or something, some amazing place like that. Yeah. But you now have the freedom to work when you want, work from where you want, because you have the time, the finance, and the freedom of choice. And so I kind of want to walk through that journey, and we can kind of stop at points to break down some of the things along the way. But walk us through like where you started with medical sales, and then what culminated and led to I'm done, I'm retiring, and I'm jumping into my own business in real estate.
Yeah, and this is fun, Jake, because this is typically the question I get. Oh, like you left medical device sales. How did you do it?
Yeah.
But I bought my first property in college when I was 21.
All right.
So
okay.
I actually started as an investor and I ran out of money. So I bought a few properties and I'm like, how am I going to generate more capital? And I read Rich Dad, Poor Dad. There were several things. I was in college. I was racing bicycles. My best friend passed away. He had a brain hemorrhage and died instantly. And I went back, I raced for another year. I went back to school. I was in school for engineering and I did not want to be an engineer. I wanted to be a professional cyclist, but it was a tough time in cycling. There was, a lot of drug use and that sort of thing. And I had friends going to Europe and telling me, and I was good, but my team went pro, but I wasn't that good. And I was like, well, I'm not going to do a bunch of drugs to be like a crappy pro.
Yeah.
So I quit. And then I was like, well, what am I going to do? I was like, I don't want to have any regrets. I want to be able to live life on my own terms. I don't want, something to happen to me like happened to my friend at 18 years old and, posthumously, if you will, have regrets.
Yeah.
So I said, how am I going to do this? And one of the realizations I came to was like, you need money, whether it's building your own business or real estate or investing. And I said, I'm going to do it through real estate. And it took me a while, read 250 books, got all this information, put a strategy together. I said, I'm just going to do it, in a very simple fashion through single family residential real estate. And this started in 1999. So you can do the math and figure out. And by the way, I'm not going to go through the whole story. You can get a copy of my book at nextlevelincome.com and it goes through all that. But I jumped into medical device, Jake, because I needed money to invest. And that looked like a lucrative career. It was something that was interesting to me. The program I was in, people used it as pre-med. So
Mm-hmm.
going into medical device, being in ORs was very complementary to my biomechanical engineering degree. I also got an MBA in finance as well. But what most people didn't know is one of my first rules was save 50% of your after-tax earnings. And if you're a business owner, you'd think of this very similar to the profit first mentality, right? Invest first. I just had a
Mm-hmm.
big chunk that I was investing, and that would go into real estate. And by the time my wife and I were 35, I didn't need to work anymore.
Wow.
And that actually gave me a lot more flexibility in my career.
Mm-hmm.
Now, I was on call, and if anybody's listening is familiar with medical device sales, you get a territory. The
Mm-hmm.
company's like, here you go, Chris. Here's your territory on a map, and you get paid a commission on whatever you sell. No base salary. Have fun.
Yeah.
So you're really running your own business. So I
Yeah.
can relate. I know a lot of you listening today
Yeah.
are running your own businesses. I ran not only my own real estate business, but also my own medical device business for about 18 years in total when
Wow.
it all came down to it.
Yeah. That's like an eat what you kill sort of industry. Like, hey
Oh,
man,
absolutely. Yeah.
there's no
Yeah.
cap here. You can
Yeah.
do really well, but you could also
Yeah.
flame out if you don't put in the
Yeah.
work or hit the ground running.
Absolutely.
That
And the thing is, it's eat what you kill, but
yeah.
man, you always got the hyenas looking over your
Uh-huh. I'm
shoulder.
sure.
There's always somebody waiting to eat your lunch in that business. It's a very cutthroat industry.
Yeah.
I felt like I was cut out for it, and it was something that I had I had a lot of staying power, a lot of focus. But the challenge, Jake, is it kind of chips away at your soul
Mm-hmm.
over
Yeah.
time. You get worn out. You get tired of missing the birthdays and the Mother's Days and the events, and
Mm-hmm.
taking a phone call as the plane was taking off for my mother's funeral. Because
Wow.
the business doesn't stop.
Yeah.
People have surgery every day.
Yeah. Now, that's so interesting that you actually started in real estate, and getting your job in medical device sales was because you needed the income to be able to
Yeah.
continue down the real estate path.
Yes.
What what was it that eventually got you out of medical sales? I mean,
Yeah.
did you hit a point where was it because you had enough passive income from your investments that you said, okay, I don't actually have to work anymore? Or
Yeah.
was it some other catalyst that kicked it off?
Yeah, excellent question. So when I didn't need to work anymore, I actually went from an individual producer role where I was a sales rep on call,
Hmm.
basically 24/7, to a leadership role. I was actually running a distributorship after that, so I had more flexibility. I was hiring and building teams, which was a lot of fun. Met some great people. Had a lot of great experiences with that, but I said, and once I was doing that, I was able to do both. And I was working like 16-hour days as
Wow.
I was
Yeah.
building, and we started to syndicate deals. But I told my wife, I was like, well, a couple things, Jake. So first off, um, not having to work allows you to make better decisions when it
Hmm.
comes to what clients you're going to work with, what positions you're going to take,
Yeah.
right?
Hmm.
Number two, I said, hey, I'm going to do this as long as it's fun.
Yeah.
And when you're having fun, you tend to make more money. I actually became more successful because I didn't need the money.
Yeah.
So
You
that meant
enjoyed
I
it.
didn't need the
Yeah.
money, and I was making more, which meant I could continue to invest. We were also building a house. And for those real estate investors out there, real estate is awesome on paper because you're not making any money.
Yeah.
But when you go to the bank and they're like, well, all your businesses are like losing money. What's going on here? How do you make
Yeah.
money? They know because it's the
Yeah.
same bank that's lending me money
Yeah.
on my real estate that's losing money.
Yeah.
But then they seem flummoxed when
Yeah.
they don't. They're like, "Where'd you get the money? How are you going to make any money?"
Yeah.
But those are the rules. So it
Yeah.
was nice to have a nice high paying 1099 or W
Yeah.
two job when I went to apply for a loan. And
Yeah.
the bank looked at my earnings and they said, we don't even need to see anything
Yeah.
else that you
Yeah.
got." Which was great. So we got a nice loan at 3% and change
Nice.
on the
Yeah.
house that we built, and so then one day it wasn't fun,
Yeah.
and I wasn't aligned with my who I was reporting to, and I said, you know what? I had a great relationship with HR because I hired a bunch of people,
Hmm.
and I talked to my VP and I talked to HR and I said, hey, I'm looking to step away. Had a lot of offers from other companies and different things, but I said, I don't want to stay in the business. I want to make sure that you guys are set. So it actually allowed me to have a really nice transition.
Yeah.
Allowed me to dictate the story and what it was, and ended up bringing in a lot of investors along the way as well,
Oh,
because they
fantastic.
were like, you're leaving this like very lucrative, 6-figure career.
Yeah.
One of my buddies, I loved, he said, I'll never forget, he goes, "What do you hate money, Chris? Why would you leave this role?"
Yeah.
Yeah. Yeah.
Yeah. And you should, and your response to him is, no, I actually love money. Come and see what we're about to do.
Yeah.
So
Yeah.
did that kick off Next Level Income, or was Next Level Income
Yeah.
a step down the road where you started doing it on your own and you said, well, I'm getting enough questions about this thing, about what I do and why I do it. And, or I have enough people who want to invest besides me, like
Yeah.
next to me.
Yep.
Let's make this thing formal. Like how did that come about?
Yeah. So we started our first syndication with my original partner was in 2016. And I officially launched Next Level Income in 2019 with our podcast.
Okay.
And Next Level Income was really an education platform. And as we expanded across asset classes and operating partners, that was really the official launch of Next Level Income,
Okay.
which was a little over 6 years ago at this
Yeah.
point.
How was that transition for you from
Yeah.
medical sales to now I got full-time freedom? I imagine for you, it
Yeah.
probably wasn't that big of a shock to the
Yeah.
system, where I've got an income that I can count on that's coming in every
Mhm.
day and comes from somebody else to, I'm sort of back to doing it all on my own, and it's passive
Yeah.
income from investments. Like how was that transition for you?
Yeah. Now this brings me to something else I've thought a lot about, and I've worked through this with some of my coaching clients. I think one of the things that holds us back from making a move is that we have this sitting in our in our subconscious,
Mm-hmm.
and I think this is specifically um, pointed towards men. And again, maybe this is our controversy of the day here, Jake.
If
But
that's the
you
worst,
know,
then we're good.
yeah,
Okay.
yeah. I told you I'd behave myself.
Yeah.
But in our society, the fact of the matter is, we're men, we're producers. What
Mm-hmm.
do we say? Oh, what do you do?
Yeah.
What's your position? How
What's your
much do
name?
you
What do you
make?
do? Yeah.
Right. Like it becomes our identity. So
Mm-hmm.
think about this. You spent, you know, all this time in school, you transitioned from school. I was working in sales, and then so I spent 20, 25 years, if you include some of that education in my career. And
Mm-hmm.
here I am, early 40s, and I'm like, I'm going to walk away from this. Now, I'm going from people calling me every day saying, "Chris, can you help me with this?" And I'm like, "Yeah, I can help you with this."
Mm-hmm.
Providing a tremendous amount of value, making a ton of money, and I'm going to turn that off. And
Crazy.
so what I really figured out that I was thinking about, Jake, was I wasn't so much afraid of the financial aspect of it. I was afraid of how I was going to be relevant in this world.
Mm.
And I don't know if you remember the scene in Shawshank Redemption when Morgan Freeman gets out of prison,
Mm-hmm.
and he realizes, he's like, "Hey, I'm not comfortable in this world." I
Yeah.
think a lot of us are scared. Like, what if I leave this world? Like, I'm not going to be relevant anymore.
Yeah.
So I think the big thing for me was, okay, what is my new identity? How
Mm-hmm.
am I going to present myself? How am I going to bring value to the world? So what I did was I started our coaching um, program, our
Mm-hmm.
coaching business, along with the investment side. And then we also have, again, our education platform, which is everything on Next Level Income.
Yeah.
And really, I want to help others achieve financial independence. So once I got that in my head, and I was like, okay, yes, like I have this experience that's unique or different than what I was doing before, but I can still bring a lot of value.
Yeah.
And I filled my days up because I like to be productive.
Yeah.
My wife's like, you would never retire. We don't say retire in our house.
Yeah. Slow
Um,
down.
yeah. So one, coming to grips with that and understanding, what my quote unquote new identity was and how I
Mm-hmm.
was going to be relevant, but most importantly, how I was going to bring value to the world. That's what allowed me to eventually make that transition.
Yeah. I totally can relate to that. And I hear that a lot from our investors, like we've
Yes.
talked about this. A lot of Skyline Point Capital's investors are business owners, not all of them.
Yeah.
We've had a
Yeah.
number of other people, but there's that conversation of relevance, like whether you exiting a business or retiring or whatever. It's like, well, this was my identity for so long. It's like being a parent. It's like my parents leave, or excuse me, my kids leave the nest.
Yeah.
I'm a dad, but I'm not really a day-to-day dad anymore. And like, there is that connection that is disconnected, that tether that's disconnected. And you really almost, you have to be prepared for that shock to the system of, I don't know what my identity is anymore. Like, what is my relevance in the world? And we have that conversation so often. And I feel like it's a standard thing for most people, but business owners especially, like, because as an entrepreneur, you're always on, you're always working. Saturdays are not Saturdays, they're Monday, right? You're always on.
And you have to have structure, and that's one of the big things.
I was going to ask you that. Like, what have you found for yourself and for other people of, like, besides structure and maybe like a new goal or passion? Like, what are ways that people you found can kind of like transition well out of either exiting a business or leaving a job and having more freedom?
Yeah. So look, I think fortunately it's the same formula, whether you're working or you're an entrepreneur or, you're a mother or father. And I think it's also important, like my wife's an architect. She has her own business. She's a mother. She's, it's important to be productive, right? And not just be productive in an insular fashion, right? Because then if that is gone, you're going to have this huge void that encompasses all that you are. So I think, that's very important. And look, if you want, check out the podcast with my coach, my good friend, Craig Ballantyne. He's coming out with a new book, Dark Side of Discipline. I think it's, let me check real quick here.
And we'll put it in the show notes so people can look it up. And for listeners, he'll be on a future episode here in a couple of weeks.
Yeah, I know I connected you guys. It's darksideofdiscipline.com. And Craig is a master at helping people really get the most out of their time. So it's very simple. It's like, the jar that you fill with rocks. You're like, oh, okay, it's full. You put the big rocks in, then you can put pebbles in, then you can put, little gravel in, and then you can put sand in. Then you actually put water in that. So the issue isn't the time that you have. Like everybody, you, me, everybody listening, if you're listening, we all have the same amount of time, right? And that's not the issue. The issue is priorities.
Yeah.
So the way I plan my year, my months, my quarters, my weeks, my days, it is all based on priorities. So for instance, my older son, he is at this boarding school. He's starting on the JV lacrosse team. So as soon as I got his schedule, I sent it to my assistant. She blocked not only those game times on my schedule, but also my travel time. So I can be at those games. I block my sleep. I block my workouts. I block my date nights with my wife. I block my son's lacrosse games. I block my vacations. Then I put the things that are going to move the needle in business. So this would be like deep work, non-urgent, important work. So these are the things you're like, well, I should really put a tax strategy in place.
Yeah.
Which, by the way, we can help put you in touch with a tax strategy if you want to lower your tax rate. But, well, okay, that's important, but it's not urgent. Like nobody's going to, the IRS isn't going to say, hey, Chris, figure out a tax strategy so you can optimize your taxes, right? That's up to me. You got to block that off, put that time on your calendar, those things that are really going to move the needle.
Yeah.
I wrote my book. How did I do that? I blocked time off first thing in the day for 90 minutes to make that happen. Then you allow your schedule to be open for those things that are going to be on your calendar that are going to take up your time.
Yeah.
They're going to happen. These are things that are going to get there. But the other thing you should do, Jake, in my opinion, is you should always do a time inventory and go back and say, hey, do I like doing this? Is this really solving my problems? And can I hire somebody that can do this for me in maybe even more efficiently or better and allow me to free up my time to make more money doing what I really provide the most value
Yeah.
in doing. And look, I don't care who you are, if you're a business owner or a parent or whatever it is, that formula will work for you no matter what.
Yeah, I love that because it's so
Yeah.
relevant too. Like, at least in my life, my parents, for instance, they're investors
Yeah.
with us
Yeah.
at Skyline, and they're newly retired. They're RVing around the U.S. for a year,
Cool. Yeah.
and they're in that sort of frame of mind of like they've always had jobs, they've always had a 15-acre ranch that they've been running, and now they have all the time in the world. And it's like,
Mm-hmm.
okay, this is a big shock to the system of like,
Yeah.
what's my relevance in this world?
Yeah.
What does the future look like?
Yeah.
And to your point, they found like, I need structure in my day.
Yep.
I need to create space for important things in my life, whether it's family, whether it's, getting time in the word, whether it's spending time with family or friends,
Yep.
and then fill it in with all the little stuff that's like, yeah, go on a walk and, go a margarita
Right.
on the beach and stuff like that. But
Yeah.
without purpose and without structure, ooh,
Mm-hmm.
man,
Yeah.
you're a ship that's, floating off to sea.
Absolutely. Absolutely. And I think that's where a lot, the whole midlife crisis thing comes.
Yeah.
We don't prioritize, we do what we're supposed to do. We get a
Yeah.
job, we go to school, we do all this stuff. We get married, we have kids, and then we're like, now what?
Yeah.
And, that doesn't produce happiness. Happiness, in my opinion, comes from, being available and providing value and connections, which is, one of the reasons I love, when we all like to get together at these meetings.
Yeah. Okay, let's continue with the story. So you're launching Next Level Income as an educational platform, as a way of helping other people kind of live the life you're living, of which, again, you're in Salt Lake, you have your own choice, your freedom of choice to do what you want when you want, and no one's telling you what to do. Walk us through then, how did that then progress into continue to syndicate and invest in commercial real estate, and that journey as you started to build Next Level Income?
Yeah. So, it's almost two separate businesses, but
Yeah.
they're very synergistic, right? Because what I realized, Jake, is we have two groups that we work with. We have wealth builders that they have money. They're looking to invest and continue to grow and build their wealth.
Yeah.
We have wealth seekers. And that might be, somebody. I have conversations with younger people in college. They're like, hey, what should I do for a career? And I'd answer these questions, it was every month, every week, every day. And then it was the same questions. I was like, well, how can I really curate this information so people can learn from my journey and also, have the same path? Because what I learned is the traditional world of finance, the traditional world of education, the traditional medical world, these systems are all broken for the most part. That's why RFK Jr., has come to prominence. That's why we're seeing all these kind of things happen, politically right now, because we might be used to these things, and humans like homeostasis, but they're not really serving us in a lot of ways. If you're listening and you're a parent, you're probably shaking your head up and down saying, well, yeah, I've had some issues with the school system. I know my kid could get a better education. Well, the beautiful thing is, with the world of the internet, we can share this information with each other, and a lot of it's free.
Yeah.
So I started Next Level Income again, education forward with that. And then as part of that, went on podcast to share, information about our podcast and my book that I wrote, which again, we give away for free on the website. So
great.
You can do that. And then what happened was, that our investors appreciated that they could share that content. And the most common thing I hear, Jake, is when I talk to a new investor on the phone, they say, oh yeah, like Jake referred me, or, I found you on social media, or I did an internet search. I got a friend that I raced with years ago. He was a really good pro. And he's like, we're connected on Facebook, and he reaches out. He goes, dude, I heard you on a podcast. I didn't really realize what you were doing.
Yeah, I didn't know that.
I'm over here in France, but I want to invest in self-storage. Can we get on a call?
Yeah.
So it was neat because he heard me because of the education side.
Yeah.
And people say, oh, I'm familiar with what you do because of this.
Yeah.
That happens. So it wasn't, I won't say that I set out to do it that way.
Sure. Yeah.
But as one kind of fed the other, it evolved. And then when COVID hit, it was like podcasting exploded. And actually my book was published March of 2020.
Ooh.
So just
right at the start of it.
It launched, and so it was, kind of serendipitous that all that worked out.
Well, let's talk. I mean, a lot of what you talk about, I mean, not exclusively, but a lot about what you talk about and investors talk about is just passive cash flow, right? Like,
Yeah.
how
Yep.
do we help investors think about utilizing their income to invest in real estate, not only for the depreciation aspect, which is
Yep.
fantastic in general,
Yeah.
but especially good for business owners. If you're getting
Yeah.
like a K1. But let's talk
Absolutely.
about passive cash flow when it comes to
Yes.
next level income. Like, what are the best ways? Let's get to the let's get tactical here. What are some of the
Yeah.
best ways for business owners or just investors in general to
Yep.
create true passive income? Like, let's break it down. Like, what are some of the things that you tell people on, like,
Mhm.
hey, okay, if you want to live a free life, if you want to create passive income, here's how you do it.
Yes. So for our coaching clients, like I just did this presentation, and look, if you're a business owner or a high income earner, like that's the number one thing. So
Yep.
I'm gonna kind of go backwards. Like passive income's great, it's sexy, but it's kind of a couple steps down the road. The
Agreed.
first thing you should do is get your active income as high as possible. So that's the first flywheel that's
Mm-hmm.
going. Once you've got that flywheel going, you want to remove all resistance that you can from that. And what I mean is you want to remove any impediments such as taxes, right? From you
Mm-hmm.
keeping that income. So you optimize your tax strategy, your legal structure, all those things. So the first thing you should do if you're listening is stop this podcast and make sure you have the
Yeah.
proper tax and legal structure set up. And that's what we
Yes.
work a lot with our coaching clients on. And they're like, oh no, get to the investments, get to the investments. Well, that's the next
Yeah.
flywheel. And the cool thing is once you start investing in those investments, and we do things like structure specific life insurance
Mm-hmm.
policies to help optimize that. We
Yeah.
just did something really cool for a business owner that was using a factoring company. So we're setting up life insurance policies for him and his brother. They're basically key man insurance
Uh-huh.
policies. And they're going to be able to use those policies and the cash that's generated from them to basically start their own factoring company and save.
Interesting.
Yes. So, there's some really cool things that you can do when you've got the active flywheel
Yeah.
going, and then you start the passive flywheel and you can bring the two together. So our flywheel looks like a big infinity loop, right? Because
Yeah.
it's weaving through all that. And
Yeah.
then that spills over into the generational wealth planning. So that's kind of the first overall philosophy. The second is you have to break away from the traditional financial mindset, which is I'm going to save as much as I can in qualified plans. And I'm
Mm-hmm.
going to work until I'm 59 and a half or 65 or 70 or whatever it is. That's not a recipe for freedom.
Mm-mm.
So some of you may have not heard this before, but let's see if you know the answer, Jake. So if you invest today at 10%, so you can
Mm-hmm.
invest for we'll say 40 years, make it a long time,
Yeah.
40 years at 10%, and you can either pay 25% tax today on the amount you invest or 25% tax in the future after 40 years on the amount you've earned. Will you have more money if you pay tax today or pay tax in the future?
So I'm paying, just to make sure I track, 25% today.
Yep. Or 25%
of what I put in,
of what you put in. Yep.
or 25% on the growth.
Yep.
Which is a better deal?
Yep. In which scenario will you have more money?
After taxes? Sorry, I was going to say, if I want to be taxed on the front end.
That's a great answer. And that's what the government wants you to think. Okay.
Yeah.
Here's the thing. Grab your calculator. The answer is it doesn't matter. It's the same. So if you do that, if you put money into a qualified plan, either through your business or 401k or however you're investing, and you skip out on taxes on the front end, you're actually betting that your tax rate is going to be lower in the future.
Lower. Yep.
Yeah. Now, for those of us that are successful business owners or investors, I plan to make more money.
More money.
Yeah. So is that a good deal?
Yeah.
I don't think so. So that's the first thing. So you have to question whether you're actually investing in the right vehicle, like a qualified plan that's restricting you to things like the stock market and bonds, and you're paying fees and you have shitty, poor mutual fund options and all these things. And then guess what? Oh, congrats, Chris. Congrats, Jake. You guys work so hard. You can invest early at 50.
Yeah.
You have to pay a penalty now because you're taking it out too early, right? You're like, wait a minute.
Yeah, I know, right?
How are these incentives working?
Yeah.
They don't. My philosophy is, yes, optimize your tax scenario, and perhaps those qualified plans play a role, but maximize your passive income to a point where it exceeds your active income.
Mm-hmm.
And if you save 50% of your after-tax income, which may sound like a big number, but you can get there over time. But if you can do that for 7 years, you're financially independent.
Why 7 years? How'd you get to that
Yep.
number?
So if you're saving 50%, it's 7
Yeah.
years. At about 15%, you will have enough passive income coming in as active income when you started that process.
Oh, that's so interesting.
Yep.
And I'm so bummed I screwed that answer up.
It's okay. No. If you answered it right, I would have been bummed because
Yeah.
that is what we've been taught, right?
Yeah.
And unfortunately, it's, the equation is what it is. Then we have to say, well, wait, it's actually a bet on this. Now,
Yeah.
tax rates may go down. Maybe Trump puts a bunch of tariffs in and wipes out the income tax, and
Sure.
and everybody laughs at me and says, "Ha ha ha, Chris, you're actually wrong." But the government wants their money, and they're coming for you in one way, shape, or form.
Yeah. I'd love to, like, you already teed up taxes. Let's talk about the tax benefits that you guys talk about. So walk us through, like, what are some of the conversations you're having with your investors about taxes? Because I've always found that this is probably the least considered topic for just people in general. I think business owners are a little bit better about it because they get hit with them, and high earners get hit with bigger tax burdens, and so they're actively thinking like, okay, what can I do about this thing? Like, there's got to be a way out of this.
Yes.
And so, what are some of the things that you're talking about with your investors about that?
Yeah. So number one, find a tax strategist, plan out ahead. You should be planning your 2025 taxes today in March of 2025, not March of 2026.
Yeah.
That's number one. Remember, $1 saved in taxes is $1 to your bottom line. Mm-hmm. So if I can help you save $100,000 in taxes, and then you can invest $100,000 more, you can get to that 50% of after-tax savings number a lot faster, right?
Yeah.
So that's the first thing. Then you say, okay, what about my taxes inside of my investments? Okay. You have to consider what's important for you. So typically you're going to have a few different levers you can pull. You got the income lever, you got the appreciation lever, mm-hmm. right? You got the tax lever. So, and then you also have the liquidity lever. All right. So it's a wheel. I call it a dial because you have dial, DIAL, mm-hmm. depreciation, income, appreciation, and liquidity, right? That's how I remember it, dial. I did a little podcast on that as well. So you as an investor have to look and say, which is most important to me? If you say, hey, Chris, I'm young, I don't need the income because I'm paying a ton of taxes. I want appreciation and I want tax benefits. Mm-hmm. You can typically get 2 out of the 4 are gonna be optimized. Yeah. If you are getting your retirement, we have a lot of investors that invest in our debt fund because they get income monthly. So they're getting a set amount of income. It's not guaranteed, but we've always paid it out every month, month in, month out, and it's liquid. So they can say, "Oh, I just had an investor. I might be in his 70s now, Jake, and he had money in there. And he's like, hey, I want to help my daughter pay off her student loan. Mm-hmm. Okay, so he was able to pull his money out and do that. So that's important for him. Mm-hmm. Okay, so he wants liquidity and income for his retirement needs. So you have to consider where you are in your investment cycle, but then always look at your after-tax earnings and how that applies. Mm-hmm. Because I was just on a call and it was for it was an investment in a business, and that business was it was actually a preferred equity option, but it was pure income, no tax benefits, no depreciation, mm-hmm. and it wasn't liquid. And I was like, well, this is cool. Like the group's really cool. Yeah. Some of your listeners would probably even know some of the restaurants that it was in, but it wasn't a great return. It wasn't liquid. There's no tax benefits, and there was actually no appreciation either. So if you look at investment, you get 1 out of the 4. You got to say, well, wait a minute.
Well, is this
really a great investment? You should at least get 2 out of those 4.
Yeah.
You need to decide what those are for you. Yeah. And chances are you can optimize your taxes, and that's why real estate is pretty great. But you can blend investments too, and look at how your portfolio works afterwards.
That's so good, because I think a lot of people, when they think investing, or they think investing in real estate, their mind instantly goes to something, and they think, well, that's the thing, I'm going to do that. And they never consider, like, well, that might be true. Like, that might be the good thing. Like, you should do that, but but have you actually stopped to think about, well, what outcome do I want? Like, what's
Right.
important to me?
Yeah.
What do I need? Like, what's
Yeah.
like, what are my tax? What's my tax situation like? And does this
Yep.
investment actually help or does it hurt?
Yes.
Because, I've heard maybe not horror stories, but I've heard stories where people are deploying capital into other people's investments and then down the road start to realize, well, I didn't know what I was doing back then. And now that I know, I wouldn't have invested in that. I would have probably invested in this thing over here because that actually aligns with what is important to me and my family.
Yeah.
And so I love your advice of sit down, figure out what's important to you, figure out what's important to your family, think with the end in mind, and then decide, what do I need to do here? Like which one of these dials actually is important to me? And then, because there are some very specific investment opportunities that fit what you're looking for. And there's some that are not great.
Right. Yeah, exactly. And it all comes with that self-awareness, right? And what's important to you.
Yeah. I love that. Well, we're running out of time here, but I want to circle back around to business. Like, again, we've talked about that. We have a lot of business owners that watch this. And so I want to talk about some of the ups and downs of next level income, whatever you're willing to share.
Sure.
But let's talk about the highs. Like you left medical sales. I'm sure you had a great network of people that came along with you. And so when you're starting to build the business, but also bring in investors to invest, you probably had a good starting point, but you had to grow from there, right? What was the catalyst? Like, was there something that really ticked off, pushed it over the edge that you saw big growth? Like you talked about your podcast, your book. Was there something that really saw some exponential growth for you?
Yeah, everything kind of happened around the same time, Jake. So I launched the book within that same year. I left the medical device space. When I did that, a lot of people said, "How did you do it?" I'll never forget one of my friends who was a VP. He was like, "Hey, can I ask you some questions?" And he's like, "You're making this." He's like, how much does it cost for you to live?" And I told him, and he's like, "And you're making that much in passive income?" I go, "Yeah." He's like, "Huh." So
Can I join?
What happened was a lot of people wanted to know how I did it. Right. So a lot of the things I talked about today, I tried to simplify it. And really it's a question of having a plan. This is what I talk about my coaching clients with. You need the information. You need to have a plan or a strategy that you formulate with the information. Then you really need accountability. You need somebody that can look over your shoulder and say, "Hey, like you move this, do that." We do it in all areas of life, right? We do it in sports. I think, successful relationships, it's great to go have somebody you can consult with and talk and get coached by and all these things. So I had all that in place and ready to go. And really I didn't want to fail. So I did a lot of that. So a lot of it was time because that first syndication, we started in 2015. I raised like $850,000 for that first deal we did. It took me 9 months to raise that. We can raise that in an hour. With
right.
So it's a lot of time, a lot of structure, and putting the right systems in place and doing that. For sure. And as far as the ups and downs, I mean, I think the downs seem to always come from, relationships. You have somebody that maybe let you down. And that's a bummer, so I think it's very important that you pick the right partners when you're in business. I know a lot of business owners are shaking their heads up and down, like, yeah, dummy, of course. So, that's very important. And, again, I talked about the importance of having relationships, but, sometimes people are going to let you down. And I think it's really great to be in relationships where you say, okay, if something goes wrong, am I going to be able to work through it with this person? That's how we picked a builder for our home. We said, hey, we know something's going to go wrong. Can we work through it with this builder? And we had some stuff go wrong and we were able to work through it. So I think having resilient relationships is probably, if you look at everything, that's the number one thing that I've learned from the whole process.
I love that. And I'm so thankful that you share that too, because, this, when you're a business owner, it's an isolated position, right? You always, you're kind of running by yourself. And so, we want to make sure that this podcast and we talk about the things that you're probably going through as a business owner. And so I really appreciate you sharing that. Before we wrap up, I want to give you the floor to be able to promote your podcast and your book and your business. But where can people find you if they want to get a hold of you?
Yeah, absolutely. Thank you for that, Jake. Thanks
Yeah.
for giving me the opportunity here. And if you're listening, thanks for your time. Check us out at nextlevelincome.com. You can get a free copy of our book. You can listen and subscribe to our podcast there. You can check out our coaching courses as well. We try to provide as much for free as we can. If you want to learn more about our investments, we've got some really cool stuff that we're doing right now that can provide maybe some consistency in the midst of some of this market volatility. And that's one of the big things I heard last year, Jake, was a lot of investors are like, why would I invest in real estate or this when I
Hmm.
can get a 20% return in the stock market? And it's like, well, it doesn't always go up for 20%. So, if you want to diversify, if you want to look at some other options, click on our invest link. You can schedule a call with our
Yeah.
team to learn more there as well.
Love that. Well, I appreciate you coming on again, Chris, to
Yeah,
building a better business. And I know that the listeners are going to have a ton of notes from this because there was a lot of gold nuggets in there. So thanks again for joining us.
absolutely. My pleasure, my friend. Thank you.
All right. Have a good one.